Hello, and welcome to a new episode of BCAS Thanks Gurucool. I am CA Akshar Panchmia, and I am going to discuss the applicability of TCS on outward remittances. TCS is governed by Section 206C. 206C was introduced along with 44AC by Finance Act 1988. The primary reason was to tax the sale of specified goods. This was challenged in the Supreme Court to check the constitutional validity of these sections. However, Supreme Court, by a landmark judgment in Union of India versus Sannyasi Rao, by the citation 1996 AIR 1219 upheld the constitutional validity of sections 206C and 44AC. It further went on to say that 206C is akin to advance tax. Further, in the year 1992, 44AC was withdrawn and omitted. However, the section 206C was retained, and over time, the ambit of 206C was expanded. Next. Coming to the topic of TCS on LRS and overseas tour packages. By Finance Act 2020, the government had expanded the scope of Section 206C to introduce subsection 1G with effect from 1st October 2020. Subsection 1G dealt with TCS to be collected by authorized dealers on remittances made under the LRS scheme. LRS scheme is a scheme of the RBI under which resident individuals can remit up to USD 250,000 for any current account or capital account transactions freely. Now, to bring in accountability, TCS was introduced on the LRS remittances over a threshold of rupees 7 lakhs. Further, it depended, based on the purpose of remittance, what rate would be chargeable on these LRS remittances. Next. Apart from LRS, payments made to an overseas tour operator for purchase of an overseas tour package was also covered by this new subsection. Overseas tour program package was defined to mean that any tour package which offers a visit to a country or countries or a territory or territories outside India and includes expenses for travel or hotel stay or boarding or lodging or any other expenditure of similar nature or in relation thereto. Therefore, the definition ideally covers three things. One is travel overseas, that is the tickets. Second is stay or boarding, that is your hotel bookings. And third is any other expenditure of similar nature. Therefore, it might mean payment for any attractions or any other bookings which would be included for your foreign travel. However, it is to be noted that where tax is already deducted at source at the time of payment, or TCS is collected for any or based on any other subsection, then the provisions of subsection 1G would not apply. Next. Coming to the Finance Bill of 2023, by which the central government aimed to amend the rate at which tax was collected for overseas tour packages and also tried to remove the threshold of rupees 7 lakhs. While these changes were not going to be applied to remittances for medical or educational purposes, for all other purposes the threshold was to be removed. Section 206C 1G was accordingly amended, and the RBI also came out with a notification under FEMA to remove the differential treatment for credit cards vis-a-vis other modes of drawal of foreign exchanges under LRS. This essentially meant that any credit card spends for the above mentioned purposes would also be covered under TCS. These changes created a lot of difficulties, and after comments from the stakeholders and especially the financial institutions who are charged with the responsibility of collecting taxes, the Ministry of Finance came out with a press release. Based on that press release, the CBDT issued a circular, the circular number 10 of 2023, which inter alia provided that the rupees 7 lakh threshold will be restored for all expenses under LRS, and for overseas tour packages, any payment or any remittance made for an amount less than rupees 7 lakhs would be treated to a 5% TCS, and any amount above rupees 7 lakhs would be treated with a 20% TCS. Being a beneficial circular, this would be applicable even when the sections of 206 provisions of 206C say otherwise. Next. In order to decide the correct rate of TCS, I have created a small flowchart which will help us decide based on the facts of the case. First question to be asked is whether the remittance is LRS. If it is LRS, then whether it is greater than 7 lakh rupees. If it is greater than 7 lakh rupees, then the next question to be asked is whether it is for education or not. If it is for education, you have to decide whether a loan was taken. Where a loan was taken, the TCS rate will be 0.5%. If a loan was not taken, the TCS rate will be 5%. Coming back, where it was not for education, you have to ask whether it was for medical. If it was for medical purposes, then the TCS will be at the rate of 5%. And where it was greater than 7 lakhs but not for education or medical, then TCS will be at 20%. Coming back to the first question of whether it was LRS. If it was not LRS, you have to ask whether it is for an overseas tour package. If it is for an overseas tour package, then whether it is greater than 7 lakhs. If it is greater than 7 lakhs, then the TCS will be at 20%. If it is less than 7 lakhs, then TCS will be at 5%. And where it is not an LRS remittance and not for overseas tour package, then such a remittance is not covered by subsection 1G, and therefore such remittance will not be subjected to any TCS. Next. I have also summarized this in a tabular manner for ready reference. Next. The Ministry of Finance has also addressed certain questions in their press release which were frequently asked by the stakeholders. Accordingly, they have clarified their position with respect to these issues. The first one being that of credit card spends you made by using international credit cards overseas. The RBI has deferred its notification by which it had reclassified credit card spends with the other forms of drawal of foreign exchange. By doing this, effectively, any spends made using an international credit card overseas will not attract TCS. Next is the TCS threshold. Considering that remittances are made for different purposes, the 7 lakhs threshold is considered to be an aggregate for all spends made using the LRS. Next, the TCS threshold for the year FY23-24. Considering that these changes will be effective from 1st October 23, there was certain confusion whether the threshold of 7 lakhs will be separate for the period before 1st October and after 1st October. It has been clarified that no such thing is to be considered, and only a single threshold limit of 7 lakhs will be considered for the whole year. Certain remittances may be made from different banks. In this case, the banks are required to take and the remitters are required to give an undertaking that the threshold of 7 lakhs has not been breached. Coming to LRS versus overseas tour packages, it has been clarified that both of these things will have independent limits of 7 lakhs, which means LRS will have a separate threshold of 7 lakh rupees and an independent 7 lakh threshold will be available for overseas tour packages. Next are the expenses which are ancillary to the main object. In this case, the rate of TCS will be the same as the rate applicable to the main object. For example, where a student is going for overseas studies, in that case, the flight of such a student, then where a person is traveling for medical purposes, then the flight of such a patient, the flight tickets of the attendant flying along with the patient, and also the day-to-day expenses required to be made by such students or patients overseas will be considered as ancillary expenses to the main object. Therefore, these expenses or these remittances will also attract the same rate that was applied to the main object. Finally, coming to the overseas tour packages, as we saw earlier, the definition of overseas tour packages contains three elements. One is the flight ticket, two is the boarding, and three are the other expenses. For it to be considered an expense towards an overseas tour package, at least two of these elements should be available in the package. This brings an end to my presentation on applicability of TCS on outward remittances. I hope this helps you plan your expenses and remittances better coming from 1st October 2023. Thank you.